Initial jobless claims, 213,000. That's a drop of 6,000 from a slightly revised 219,000. Continuing claims, 1.755 million. That is not much on. That's a little bit higher than a 1.726. Now let's get to the meat of the matter. July PPI, expecting up 0.2, received unchanged. Goose egg, no change. No revision to 0.3 increase last month. And if we strip out the all-important food and energy, it's also on the light side, only up 0.1. If we look at ex-food and energy on a trade basis, it's up 0.3. Let's look at year over year, shall we? Year over year headline final demand up 3.3. That's actually a decrease of 0.1. Remember, that 3.4 we had last look was the highest year over year since November of 2011. So it eased up a bit. And if we look at year over year ex-food and energy, it is up 2.7. That's also a 1/10 cooler than our last look, which is 2.8, and that was the highest in September of 2011 versus November on the last one. So let's take a step back here. Claims still remain at a very, very low level. Inflation on headline, very tame. Even ex-food and energy on the year over year, they're still running a bit hot. And all this, of course, leads right down into the tunnel of tomorrow's consumer price index, which, of course, will be much more important. You know, if there was anything to this number, we wouldn't still be at 295 in 10s or 310 in 30s, but we are. Dollar index up just a bit, still hovering at a nice level, darn close to the 13-month highs that we experienced a couple of sessions ago. Michelle, it's all yours.
Thank you, Rick. Going through the numbers, Steve Liesman joins us now with more reaction to those numbers. And no inflation to scare the Fed into being more aggressive here, from what I can see.
No, that's right. And no sort of trade impact that I can see here. It's not shown up. I mean, one thing we see for sure is that the energy prices declined in the month. I think some of them are back up again. Is that right? We've had a little up and down. Mm-hmm. Joe, you made a flat
66
a little bit. Still
crude.
Okay.
I don't know.
So gas was down 0.1, heating oil down 3.9. That's a big number. Residential natural gas down 0.5. You guys have been talking about that used car story. Passenger cars up 0.7. I want to do two things real quickly. I want to look at the Fed probabilities, the outlook, which is before this number, but I'm guessing they haven't changed very much. 92% of the September hike, December 66%, and then the next one doesn't come till June. So something of a pause priced in. But I have to tell you, I'm going to show you this some other day. But the idea that Powell will now have a press conference every month has changed the whole structure of that probability. There's now a high probability for each of the months, but the one where you get over 50% is not until June. Now, let's take a look at how the Fed is going to think about some of these tariffs, and I don't think it's all that worried about it just yet. One, it's going to look past one-time price rises. Remember, what we're thinking up here is a generalized rise in the price level. We're looking at a rate. So going up one time on a price is not that big a deal. Two, it's going to monitor the effect on inflation expectations. Does it get built in? I don't know that that's the case now. No evidence of that. It sees offsetting economic drag. And finally, it's going to watch the flows. Since a lot of these tariffs right now are at the producer level, watch the flow to the consumer level. And that's why we're going to take a look tomorrow. Had this big rise, for example, in washing machine prices because of the tariff. It's okay for it to happen one time, because the next month you don't get that increase. So it's not a rise in the inflation rate. It's a rise in the price level, which doesn't concern the Fed. So one is, if it keeps happening, that's a concern. And two is, if the idea that, oh my God, all the prices are rising all at once makes me think, change my expectations for inflation, then you have an impact from the tariffs. And you can see right now we're a long way from that.